December 31st, 2025, the day historians will one day call the funeral of the old money system, the date people will pretend they saw coming but didn't. Because the truth is chilling. Long before the fireworks, long before the countdown, long before the empty promises of a strong economy filled the screens, the old monetary order had already taken its last breath, and nobody noticed. Nobody asked why central banks suddenly went quiet, why governments pushed emergency laws with no debate, why banks rewrote their digital infrastructure in total silence. If you're watching this, ask yourself one question: what really dies when a money system dies? Most people will never know. Most people aren't supposed to know. Because the collapse of an old financial structure never looks like chaos from the inside. It looks like routine. It looks like policy updates. It looks like temporary reforms. It looks like nothing at all. That is why 99% of people have no idea the transition already started years ago while they were scrolling, working, sleeping, arguing, distracted by everything except the one force that controls every part of their life: money. The dying of a currency is never announced. It is hidden behind the language of economists. Words like liquidity, stability, regulatory modernization, digital transition. Words nobody questions. Words designed to keep the masses asleep. But here is what they Dante want you to see. Every major financial shift in history happened quietly, until one morning people woke up realizing the rules of their entire world had changed, without their permission. To understand what December 31st, 2025 really marks, you need to look backward to the long, bloody timeline of money systems collapsing and being replaced. This story did not begin in 2025. It began in 1930, when the Federal Reserve was quietly born in a closed-door meeting on Jekyll Island, an event sold as stability, but engineered by bankers who wanted control, not fairness. Then, in 1944, the Bretton Woods system crowned the US dollar king of global finance, anchoring the world to a single currency. But by 1971, the dollar couldn't hold its promise anymore, and Nixon killed the gold standard in one televised speech that most citizens didn't understand. The moment he did, money stopped being something real and became whatever governments needed it to be. Debt exploded, markets soared. Inequality widened, and a new class of financial elites emerged, people who didn't just use money. They engineered it. Through the 1980s and 1990s, the petrodollar system secured America's financial dominance, while the rest of the world pretended the game was fair. But every empire hides the cracks forming beneath its feet. In 2008, the first alarm bell rang. A total collapse of the global system, only avoided by printing trillions and convincing the world that everything was fixed. It wasn't. The system survived, but it became addicted to one thing: cheap money. Every crisis after that 2011, those Neil Keynes said 2020 was met with the same drug. More printing, more debt, more promises. And here's the detail most people ignore. Every time a system becomes dependent on artificial life support, it becomes weaker, not stronger. Fast forward to the early 2020s. Central banks studied the chaos, the inflation, the political tension, the crumbling trust, and quietly began constructing the next phase: central bank digital currencies. Digital dollars, digital euros, digital yuan, not cryptocurrencies but programmable money, controlled directly by the same institutions that caused the crises in the first place. By 2022, nearly every major central bank in the world was legally preparing for CBDCs. By 2023, pilot programs spread across more than 110 countries. By 2024, the IMF openly said the global financial architecture was outdated. And in mid-2025, something subtle but huge happened. Countries stopped talking about if the digital transition would happen and started talking about when. Behind the scenes, banks upgraded their code bases for interoperability. Payment processors added future standards to their documentation. The BIS, the central bank of central banks, announced its unified ledger framework. The world didn't hear the alarms, but the elite did. Institutions quietly moved capital. Sovereign wealth funds shifted reserves. Major corporations cleaned balance sheets in preparation. And while the public debated elections, celebrity gossip, and meaningless culture wars, The global financial world was preparing for the end of the system that shaped the last 50 years. Look closely at 4 undeniable events that marked the point of no return. First, the explosion of U.S. national debt, crossing $35 trillion in 2024 and projected to hit $39.5 trillion in 2025. A currency cannot survive that trajectory without a fundamentally new structure. Second, global de-dollarization accelerated as BRICS members launched their settlement infrastructure, bypassing the dollar for oil, minerals, and technology. Third, the Federal Reserve, European Central Bank, and Bank of England all signaled digital modernization requirements for private banks code. Fourth, payment giants like Visa and MasterCard began supporting blockchain settlement rails, not out of innovation, but survival. These 4 events formed a perfect storm. A dying system, a rising alternative, collapsing trust, and institutional preparation. By late 2025, the old money system wasn't struggling, it was gasping. Now follow the timeline directly into 2025 and 2026. In Q1 2025, the VES published its 2025 to 2030 digital monetary roadmap, stating that over 85% of global transactions would be digitally settled. In April 2025, the U.S. quietly approved regulatory language for a digital dollar compliance framework. Buried inside a massive policy bill few citizens even read, in June, Europe announced a formal CBDC rollout schedule for mid-2026. In August, China accelerated the international expansion of the digital yuan, integrating it into cross-border payment hubs. Then came October 2025, a month historians will one day mark as the quiet turning point when 3 major U.S. banks announced temporary service disruptions due to infrastructure upgrades. Insiders knew those upgrades were CBDC rails. By November, payment companies began rewriting user agreements. By December, Treasury officials began using a new phrase publicly: the transition. And then came December 31st, 2025, the day the old money system officially died. Not with panic, not with headlines, but with a silent shift in back-end accounting that moved the U.S. financial system onto its new programmable infrastructure. The public still saw dollars. Banks still displayed numbers, but behind the screen, the foundation had changed forever. The old money system, based on banks issuing credit, money created through debt, opaque liquidity and interest manipulation, was replaced by something more centralized, more trackable, and more controllable. This is where the prediction turns dark. Because every time a money system dies, winners and losers are chosen long before the public even realizes a game was happening. Who wins? Governments gain unprecedented power over financial flows. Central banks gain direct control over issuance and circulation. Big tech payment alliances secure permanent importance. The elite already holding real assets like land, commodities, rare metals, private equity become immune to the storms. They don't depend on currency. They use currency. And who loses? Anyone who believes their bank balance is wealth. Anyone who saves in depreciating currency instead of assets. Anyone whose job depends on old financial infrastructure that becomes obsolete overnight. The middle class, already squeezed by inflation, becomes fully exposed, because programmable money is not neutral. It is a mechanism of control. Transactions can be traced, limited, reversed, taxed, automatically denied based on rules most people will never see. The new system will promise safety, efficiency, stability, but efficiency always comes with a price, and that price is freedom. So what happens next? Expect 2026 to be the year of incentives. Governments will not force people into the new system, they will reward them into it. Faster tax refunds, instant payments, lower fees, subsidies, benefits. Convenience is the new currency of control, and while millions rush in, not understanding what they're giving up, a small percentage of the population will quietly move toward decentralized assets, Bitcoin, alternative stores of value, privacy tools, physical commodities, anything the system cannot control. The divide will grow. One group fully dependent on digital money, the other operating outside it. And history has shown, Every era of financial transformation ends the same way. The informed rise, and the uninformed obey. If this video woke you up, drop a like and subscribe. New forbidden truth, every single day. Turn on notifications, the next one might save your wealth. Comment the one thing you're doing right now to prepare. I read every single one.